prices to stay high. At some point, there'll be some, like I said, either a resolution or a clearer path toward a resolution of the war, and prices will come back down. But they're not going back to where they were. Gold's going to stay higher, probably above 1780, 1800. And, that sounded ridiculous yesterday, but when the price gave up, $100 today, another $100 on the downside once the war is resolved, all of a sudden sounds like a piker.
Welcome to Inside the Markets, flagship podcast of StockPulse.com. Joining me today, I've got Jeff Christian. He's the managing director of the CPM Group, and it was a big part of our symposium here in Coeur d'Alene here last year. So I certainly appreciate that. And Jeff, thanks for being here. And times are crazy right now, so I figured what better guy to get on here and run through the commodities here than with you. So appreciate you joining me.
Yeah, I'm glad to be with you. It's certainly interesting times.
Yeah, you did a video here yesterday. You talked about gold and silver, maybe talked about price runs and how if things are cyclical or not, maybe not to investors to run out and necessarily chase metals. So want to kind of get into that, but maybe before we do, pull back a little bit, and what's Jeff Christian's view of what in the heck is going on right now? Give us a little look into current conditions from your perspective.
Well, we did a tweet on Monday. And the tweet was basically, because you have to 186 characters or whatever. The tweet was that investors needed to differentiate between price moves, spikes higher and lower due to event-driven short-term events, and longer-term cyclical or secular upward and downward moves. And right now we have both things going on across financial markets. So it's true in gold, silver, copper, wheat, petroleum, but it's also true in stocks and bonds and currency markets too. So you've got these longer term trends. And if you look at it, gold and silver were moving higher prior to the Russian invasion of the Ukraine. And now they've spiked higher. Now today they spiked down. So you have to sort of say, okay, what portion of the price of gold or silver represents these cyclical and secular upward momentum in prices, and how much of this is this event-driven spike? And we saw that today. It was very interesting because I was talking with investment market client today. And I said, he said, well, the price of gold is off $50-$60 and silver is off, I think, about 60-70 cents, maybe more. And he said, is this a buying opportunity? I said, it's a buying opportunity for a very short-term investor because the war's not over and these prices will stay high and volatile until either the war ends or there's some clear path toward a resolution of the war. And then it could come off sharply again, But in the meantime, if you're a longer term investor, so if you're a very short term investor, like day to day, hour to hour investor, this was a great buying opportunity today. If you're a longer term investor, you should probably wait. And then, we do a lot of work with options. So we're doing a lot of work with investors right now saying, okay, stay long gold and silver, but buy an option strangle so that, or buy a put. Just buy a put to give yourself downside protection and also to profit when the price falls. And if like 2 weeks ago before the actual war, we were saying buy a strangle. So buy a call too. So stay long, protect yourself with a put, and you could actually make a lot of money. And in fact, on the day that the war started, the 24th, I think it was, of February, if you had taken our strategy of buying a strangle, you could have made like 86% in 24 hours. With your put, you'd still be long the physical gold, but you would have made 86% of the amount of money that you spent on your hedge.
Yeah, certainly a lot of volatility, and I guess you really want to predict when things end. I mean, it seems like a tough game to play. So what else is grabbing your attention here? Obviously, these metals. I know Russia was talking about needing to liquefy some gold, and I thought it ironic. You said they clear things in dollars. But how do you see that going? Do they need to off that gold, or Russia's been obviously a big buyer of gold?
It's hard to say because like we were just in touch with one of our Russian clients, and they said, we still have operations. Our bank is still connected to SWIFT. We're shipping metal. We have airlines that are shipping metal out of Russia, and we can settle. There are no delays in either taking payments or making payments. So, we're still in business. And I think that that's very telling because, it's like, well, who's winning in this war? Well, US defense contractors definitely are winning, and the US government winning, and the dollar's winning, and the politicians who are financed by those defense contractors are winning too. So, they had an economic and political incentive to allow Russia to attack, and they have a political and economic incentive to let this war go on a little bit longer. When their economic and political incentives disappear, this war will end very quickly because we have the capacity to end it, and the fact that they haven't cut off all of the banks and they haven't cut off oil and gas. If Europe cut off oil, the United States only accounts for about 14% of daily oil exports from Russia. Europe accounts for most of the rest. And natural gas is very large too to Europe. If Europe cut off oil and natural gas imports from Russia, this war would be over in 48 hours. But they're not. Right. So in the meantime, you do have some portion of the $500 billion of foreign exchange reserves that the Russian government owns, the central bank, which are now frozen in Western banks. And we don't know how much of that 500 billion was in Western banks, but apparently a lot of it. A lot of it was in Chinese banks probably. So that's still available to them. They need cash, and they're going to get cash from oil and gas exports to Europe. And if they need cash, they do have gold to sell, and they'll find ways to sell it. There's always a buyer for gold.
Yeah, especially if the U.S. Treasury is going to continue to dilute itself down here and put stimulus packages together. So what else has your attention? We're sitting on a war here. You're into the PGM groups as well. So I saw you had I think Group 10 Metals you were with yesterday, a little a webcast of them. Why don't you talk about your thoughts on PGMs?
Well, our view on platinum group metals is that we have been saying for some time that we thought there'd be a reversal of fortune between platinum and palladium. Palladium has risen very sharply, as has rhodium, but rhodium is a special case. But there's been a shift in autocats really over the last 30 years. Away from using so much platinum and using more palladium. If you go back to the early 1990s, you used twice as much platinum in an auto catalyst as you did in use palladium. And that shifted over the course of the 90s into the aughties to the point where you, in gasoline powered vehicles, which is what we use in the United States, Canada, and China, the two of the major markets and a third important one, you had palladium rhodium catalysts with very little platinum. In diesel catalysts, which they're down to about 25% of the European market now, and about 14%, I think, in India. You had more platinum intense catalysts, but you also found a shift where they were substituting away from platinum to palladium when the price of platinum was higher. Now, a few years ago, we saw palladium shoot up higher than platinum, and it's been that higher than platinum for several years now. And the auto industry is now shifting back from palladium intense catalysts to platinum intense catalysts. And that is being reflected in the fact that the palladium price, until this war broke out, the palladium price had come down from its early 2021 peak, and it was heading lower. And once the war is over, it will probably head somewhat lower again. But platinum prices, which had been range bound between 800 and 1,000 from 2015 until 2021, had broken above 1,000 and was probably heading higher. So you're seeing this reversal of fortune where the auto industry is shifting away from so much palladium back to using more platinum at the expense of palladium. And that's going to be reflected in the price. And it was starting to be reflected in the price. And then the war interrupted. And Russia accounts for 40% of palladium mine production. It accounts for, I think, about 13 or 14% or 12% of world platinum production. So the war and the potential for interruptions of shipments from Russia has a bigger potential impact on palladium. So you've seen palladium prices rise to record levels today, yesterday and today. But again, going back to my jaundiced view of American politicians, you are not seeing any sanctions put on Russian PGM exports because the auto industry in Europe and the United States need it. And there's been no move to stop it. In London, the banks that trade gold and silver have said we're not going to accept newly refined Russian gold and silver for the foreseeable future. The banks that trade platinum and palladium haven't said anything.
So untangle this for us here. If you put sanctions on Russian banking, and when you get right down to it, the Russian billion oligarchs, the one who funding the whole dang thing, are certainly embedded in the foundation. So aren't we in fact declaring war on ourselves? You're talking about potentially freezing Russian assets, freezing, maybe not accepting gold, things of that nature, cutting the pipelines off, and all that does really is direct us to $5 gas here. So I mean, you can't. I guess my point being here, Jeff, is the Russians are embedded in the financial system all the way down to the core. So how's this gonna unravel with a war with Russia?
Let's look at oil. You know, oil prices 4 months ago were probably $50-$60 a barrel, you know, $50 to $65 a barrel. And they moved higher, and they were trading, say, $70 to $80 a barrel 3 weeks ago, right? So the oil price has risen sharply already, and it rose sharply because OPEC said we're not going to increase production greater, and because demand for oil in the United States and in other countries was rising very strongly. We had a very strong increase in oil demand and oil usage in 2021 globally, and that put upward pressure on prices. At the same time, you have more oil reserves in capped wells in the United States than the official oil reserves of Saudi Arabia. Now, Saudi Arabia has enormous unofficial reserves that everyone knows about, but they don't talk about, and they don't report the numbers. But the reality is, like, you know, okay, we've just cut off 700,000 barrels of Russian oil a day. We could compensate for that by opening capped wells. If we were China and we had a managed economy, if we were communist like China, the government would say, open those wells, and pow, we'd have 1 million barrels of domestic production within a week, because that's all it takes to uncap wells. So we have solutions there, they're not there. But the point that I want to make to your point is, you had seen oil prices rise 50% based on non-Russian, not the war. Now, with the war coming and the sanctions and the potential for sanctions and cutbacks, you've seen the price go from $80 to $130 to $120. So the price has risen another 50% on the war. And this goes to what I was saying earlier about the difference between that cyclical upward push in oil prices that took it to 80 and the event-driven push from 80 to 130. You know, the price will come back down, but it's going to stay high because the world is still very much hooked on oil. And we have seen economic and political and financial issues reduce US production in Canada and the United States and in some other places. And we've seen other issues reducing production and increasing consumption. So there's this underlying support for higher oil prices that the war has compounded. And yeah, the guys who sell oil from Russia are making a fortune thanks to the fact that their government attacked Ukraine.
So what's your overall outlook here, Jeff? How do you see things going? What should investors be thinking right now? Are they should they be sitting on cash waiting for opportunities? Should they be getting involved here? How do you see it going?
Oh, again, if you're a longer term investor, you don't want to buy high. We're seeing prices having spiked up higher. And if you're a longer term investor, you wouldn't necessarily want to buy at these levels. You might want to buy some puts, which would give you the opportunity to profit on the downside. But if I were a longer term investor, I'd be holding my powder right now. If I were a short term investor, I would be there in and out, as the markets have been and are likely to continue to be volatile. Prior to the 24th of February, we were talking about 4 topics when clients asked us what the markets were doing: interest rates, inflation, the Russian belligerence toward the Ukraine and the West, and investor trends in buying physical gold and silver. And 2 of those things, interest rates and inflation, have just sort of been pushed to the side by the immediacy of the war, but they're still there. So we're still looking for prices to stay high. At some point, there'll be some, like I said, either a resolution or a clearer path toward a resolution of the war, and prices will come back down, but they're not going back to where they were. Gold's going to stay higher, probably above 1780, 1800. And, that sounded ridiculous yesterday, but when the price gave up, $100 today, another $100 on the downside once the war is resolved, all of a sudden sounds like a piker. So I do think that silver and gold will come down. They'll go back into that base building period that we saw prior to the last week of February. And then at some point, because we still have all these economic and financial issues, as well as political issues, domestic and global, you'll probably see gold and silver spike higher again. But that might be 2 or 3 years from now, when the next wave of events and problems come to the forefront.
So by those comments, would you call inflationary more transitory from your perspective then, or would you say, no, it's here to stay and it's going to be building? And if so, what to do about it?
Inflation, it's exactly the same thing. There's this core of higher inflation and inflationary pressures, mostly in the real economy. I mean, some of them are the financial, the monetary largesse, and more, everybody focuses on the Fed and the monetary largesse, but the real killer inflationarily has been fiscal policy from the White House and the Congress, not the Biden White House and the present Congress, but the White House and the Congress over the last 20, 40 years. And, if you look at it, you say, well, yeah, this is bad, but it was bad under Trump. Yeah, but it was bad under Obama. Yeah, but it was bad under Bush. And as President Cheney, Vice President Cheney, said, deficits don't matter. And I don't think he really believed that, but he believed that from a political perspective, you could tell people that deficits don't matter. Deficits definitely matter, which is why we think that we're going to see, record prices later in the decade, because these things will come home to roost. But I think that those things are there and you have to pay attention to them. Now, you have a spike in inflation that we've seen since last February. So it's 12 months old. That's going to dissipate some, because some of those things were in fact transitory and they'll go away. Some of them weren't even transitory, they're arithmetic, right? People tend to look at inflation year over year. 2020 was a year when no one was buying anything because they were staying in their apartments and prices were low. 2021 was a year not only when we recovered from 2020, but we went 20% higher in some demand categories than 2019. Imports of goods into the United States were 20% higher in 2021 than they were in 2019. So it wasn't a recovery from 2020, it was a recovery from 2020 on steroids. And that pushed prices higher. And as you go forward, you'll see CPI measured year over year from 2021 to 2022. Prices aren't going to fall, but they may not rise as fast as they were rising in 2021. So the CPI, which went from 1.5% to 2% for many, many years, and the Fed was saying, oh, inflation is too low. And then it went from 1.5% in January of 2021 to 7.5% in December and January of 2022. When you start measuring 2022 relative to 2021, you're going to see 2%, 3% inflation. It has nothing to do with price levels. It has everything to do with basic arithmetic. And if we hadn't destroyed the education system in America, people would understand that. But, you know, there was a conscious decision in the late 50s, early 60s to deprecate education and say, you know, these people really don't need to know math and civics and history. I mean, when I was a kid, we had to memorize the Declaration of Independence. Yeah, now you don't even have to read it in school. So,
you might even get chucked out of school for reading it.
Yeah. Well, you know, it's funny because I was in Idaho at a silver conference many years ago, and people had what they considered the Constitution in these little pocketbooks, but they were expurgated. They were edited, and there were passages of the Constitution that weren't in there. And it was like, wow, you know, you guys are the guys who think that the Constitution is important enough that you carry a copy around with you. But the copy you have has been edited to leave out some pretty important points. You know, I mean, I was on a conference in 2000. Was it 2008 when the gold price went to 1,000 and came back down to 900. And I was at a conference with a bunch of gold bugs. And one guy who always said that the Constitution said that gold and silver are money, I said, it doesn't actually say that. And we got into this debate in front of the audience, and I had my laptop with me. I opened up the Constitution and I read the passages. And he said, what kind of geek carries the Constitution around with him? And I said, what kind of geek misrepresents the Constitution for his entire career? His entire career, he was misrepresenting the Constitution.
Oh, Jeff, how do people follow you?
www.cpmgroup.com. That's the best place to find it. You can send an email to info@cpmgroup.com and ask us for questions and ask us about information. We'll be coming out with our gold yearbook in the first week of April, our silver yearbook in the first week of May, and our platinum yearbook in the end of June.
Okay. Well, look forward to seeing you here again at the StockPulse Silver Symposium, and I appreciate your time. Jeffrey Christian, managing partner. He's over there at CPM Group. Jeff, thanks for the time. I'll look forward to checking back in and seeing how things shake out over time.
Good to talk to you.